The content presented at this event is proprietary to and are subject to the copyrights of Jefferies or third parties. Further, as a matter of legal compliance, we remind you that you must not attempt to elicit from any speaker at this event any material, non-public information, or other confidential information, and accordingly the speaker may decline to respond to any question in his or her sole discretion. You may not publish or otherwise publicly disclose the name of or otherwise identify the speakers unless Jefferies permits it in writing. By attending this event, you agree to all of these restrictions.
Hi, good morning, everyone. My name is Sandy Wan, and I'm a Senior VP at Jefferies Investment Bank. We're very pleased to have Mr. Alexio Quaglini, CEO and co-founder of HexTrust with us today. HexTrust is a leading digital asset custodian in Asia. The company's proprietary infrastructure platform offers custody, DeFi and staking, brokerage and trading, and financing and structured solutions to traditional clients like banks, financial institutions, and asset managers, to corporations like family offices and high net worth individuals, and digital asset organizations. Mr. Alexio Quaglini is the CEO and co-founder of HexTrust. He has over 15 years of professional experience developed in banking, regulatory body, and management consulting. Prior to joining HexTrust, Alexio was the head of strategy Asia of BBVA, overseeing the overall banking development and geographical footprint in Asia. Alexio was subsequently director of financial institutions at First Abu Dhabi Bank, where he was responsible for developing the bank's business with financial institutions and non-bank financial institutions in North Asia. Alexio has also worked with the Italian Financial Services Authority in Rome, where he was responsible for the supervision of public equity and derivatives markets in the Market Abuse Department. So it is with great pleasure that I'm welcoming Alexio to a fireside chat with us today. Before we begin, for those that have questions, please feel free to type into the chat box and send them over to us. Thank you. Welcome, Alexio. Thank you so much for your time this morning.
Thanks for having me here, Sandy.
Thank you. So can you tell the audience a little bit about yourself and your background before co-founding HexTrust?
Yeah, sure. I'm an engineer by background, specialized in security of IP networks, but I didn't really spend too much time in the engineering market. So after a couple of years of engineering experience, I moved to the financial markets. And as you mentioned before, I joined the Italian regulator in the Market Abuse Department. After that, I had the opportunity to come to Asia and work for around 7 years for two banks based in Hong Kong until basically the end of 2017. Late in 2015, beginning of 2016, I set up my first startup, Repo Capital, an investment company focused on technology and blockchain. And that's actually how I got my first kind of exposure to the blockchain market. At the end of 2017, through Repo Capital, I met my co-founder, Rafał Czerniawski. And at the beginning of 2018, we basically kicked off this project and started HexTrust.
Thank you. Can you share with us why you started HexTrust and what does HexTrust do?
Sure. So it was the second half of 2017. I felt we were in front of a revolution. There was a new asset class in the market, and this is not something that happens very often in the life of in the financial markets, right? Where in traditional banking, we're used to FX, fixed income, equity, credit, but it's not every day that we have a new asset class coming to that you can observe the prices of on Bloomberg, right? So all of a sudden we had crypto. It was a new asset class with different market rules, with different market participants, and I thought it really had the potential to become a widely used asset class. I thought about two things, that it was a new asset class, and back then the market was mainly retail based. But at a certain point in time of the evolution of this asset class, institutional investors will be interested to enter this market. So they will be interested mainly in two things, right? So in investing in this asset class for the investment for the buy side and for the sell side to provide services to access this asset class to institutional investors. So I thought that it would be required eventually to have an institutional infrastructure and institutional service providers in this new market to provide services to financial institutions. So that was really the reason why we decided to set up HexTrust. It was we had the objective to bring that kind of institutional grade infrastructure and platforms that we have in the most developed equity markets to this new market that was the basically this crypto asset class.
Thank you. Can you please share with the audience where HexTrust is today in terms of client size and funding?
Yeah, sure. I forgot to mention exactly say what we do. So when you have a new asset class, usually the main issue the first issue that institutional investors have is, where do I keep it, right? So that's why we started from custody, that as a very important, I think even more important than in the traditional markets. We can talk about it more later in this conversation. But we thought it was really necessary for the development of this new asset class to have institutional bank grade custodians to give that kind of safety to institutional investors entering the market. In terms of where we are today, we have around 200 institutional clients, about around $5 billion in assets under custody. And we've closed 3 rounds of funding with a total funding of around $100 million. As of today, I would say we are more or less of a diversified financial institution where custody is obviously our core offering, but we have built a number of services on top of custody, such as market access, trading, market making, etc., as well as financing and structure solutions.
Thank you. Tell us about your journey building HexTrust back in 2018. We had just entered the crypto bear market. What challenges did you face then?
It feels like the same thing as today. We're back in the same bear market. I think there's one main challenge that is more or less similar to what we have today, which is funding. Right? So in bear markets, it's very hard to attract funding, and especially if you're not in the main areas, for example, in Silicon Valley. And startups today, fortunately or unfortunately, they depend heavily on funding, and usually the best funded startups are the ones that have a better chance to be successful. So it was a struggle for us to obtain the first checks from investors, but we were able to do that. The second problem that we had back in 2018, which is not a problem anymore, luckily, it was adoption. So we had this year of crazy speculation in 2017 with all the ICO craze, etc. And after that, lots of investors got burned. And after that, basically the market participants didn't want to hear about blockchain anymore. Banks that were just starting to being a little bit interested in the space and understanding more this asset class after the intervention of regulators going after ICO issuers, etc. They were a little bit more, I would say, more hesitant than they were before. So the whole market slowed down, and it was quite hard to attract clients. But in hindsight, it was very good for us. And actually, back then, we knew that because we were just at the beginning of our journey. We started the company actually in the bear market, and we had to build. So it took us more or less 1.5 to 2 years to go to market with the first kind of marketable product. And then I would say that the bear market favored us as it kind of put us at the same level as the players that have started a little bit before us.
Good. So how were you able to secure banking and financial institutions as clients early on in HexTrust journey?
that was obviously very complicated. And I mean, as you as you can imagine, even today, 5 years later, there are not many traditional banks that have crypto offerings in the market, right? So you can imagine 5 years ago when if you were lucky, somebody in the digital innovation department of the bank had heard something about Bitcoin. But for us, it was our strategy from day one, right? So we were convinced that financial institutions would have to enter this market because the young population was adopting this new asset class. So we built the whole strategy around that. So first of all, we built the technology in a way that would be similar to what financial institutions are used to using in the traditional markets. And secondly, we build a company around those things that would be very important for financial institutions when assessing a service provider. So for example, we started our licensing process, trying to obtain licenses in the key markets. We started working with a Big Four to get audited. We worked on the basic certifications such as SOC 2, Type 1, Type 2, etc. We worked with insurers to get insured for the assets that we had in custody. I would say, designed the processes of the company around all of those things that financial institutions are very familiar with. So segregation of role, responsibilities, duties, conducting penetration testings every 3 to 6 months. So the whole strategy was really around that. And at a certain point, our tagline, the company was, Xtrust was the basically banking gateway to digital assets.
Thank you. Well, you must have faced a lot of rejection with investors and clients skeptical of digital assets back then, as you mentioned, and also the need for custody solutions back then. How did you overcome all these rejections and keep moving forward regardless?
Well, I think if you start the journey of a startup entrepreneur, it's something that you have to take for granted, that there will be a lot of rejections, that your counterparties on the other side of the table, your potential clients, they know that you're a startup, and then what you're selling, that you don't have a 3-year kind of track record of audited financial statements, that you have very limited resources, etc. So I think it was something that you have to expect. But then I think there was something that we did that helped us quite a bit. The most difficult part, I would say, in accepting a startup to provide services to a established financial institution is this thing of the track record, right? Me as the head of procurement, how do I take the risk of having Xtrust, a startup, to provide such an important service to us? So we partnered up with bigger companies, right, to basically go to market with a joint offering or doing some kind of a joint marketing. For example, since the beginning, we worked with IBM, that is our technology provider in terms of the HSM infrastructure, right? And we're able to penetrate into the digital departments of most financial institutions here in Asia. And in Europe, early on we did a partnership with SIA, now acquired or merged with Nexi, which is one of the most established providers for payments and infrastructure for financial institutions in Europe.
Yeah, I see. Well, not easy at all. It's a tough path, but you certainly are making it. Many people in the audience might be familiar with traditional custodians in the banking world. Can you explain the main differences between a digital asset custodian and a traditional custodian?
Sure. So that obviously this could be a very long conversation, right? But I would say that there are mainly two big aspects of differences between traditional custodians and digital asset custodians. So the first one is really, it comes from the difference in the market infrastructure, right? So in traditional finance, you always rely on centralized institutions to hold the actual final source of truth or record of which asset belongs to whom, right? So in the equities markets, you have the CSDs, the central securities depositories, and fixed income. You have for international issuances, you have the ICSDs, for the Clearstream, the Euroclear. For FX, you always have the central bank that at the end of the day has the record of who has what. So basically the role of custodians in the traditional financial markets is to connect to all these centralized institutions, create a connectivity, build the pipes, right? And to provide access to these markets to their clients. In the blockchain world, the real difference, which I think is not really clear to most people, is that these CSDs, decentralized institutions, the depositories, do not exist. Right? So the blockchain is, you could define it as a decentralized CSDs. So the ledger that before was held by a centralized institution now is held in a decentralized way on a decentralized ledger, which is a specific blockchain protocol. Right? This has a couple of implications for the role of a custodian. The first one is that instead of creating the connectivity with the CSDs in every single market, you have to build the connectivity to different blockchain protocols. Right? So if you want to offer a market in Bitcoin to your clients, you have to be able to connect to the Bitcoin network. So you have to run a node, and you have to be able to observe the transactions that happen in the network and understand the balances. Right? If you want to connect to Ethereum or Solana, you have to connect to the protocol, run a node, observe the transactions, read the balances. Yeah. So this is the difference. Instead of connecting to the CSDs, you need to connect to a number of blockchain protocols. Yeah. The second one is that if there is an issue in the traditional financial market in terms of reconciliation, at the end of the day, you have two custodians and their balances, they don't reconcile. I don't know exactly how to do it, but I guess they call the CSD and they compare notes until they understand where the error was, and they do amendments. In the blockchain market, this thing doesn't exist. If you make a mistake, if you transfer more assets than you should have because you added a zero to the transaction, then the assets are gone. There's no centralized entity that can actually unwind the transaction and change the balances that are shown on the network, right? So this has an implication on I would say, the hygiene of your processes and the number of maker and checkers that you have to have throughout the whole life cycle of a transaction to make sure that you don't make any mistake. Otherwise, there wouldn't be somebody that you can call to unwind that transaction. So I would say this is the main difference on the market infrastructure. The other big difference is the technology, right? Obviously, the CSD and the ICSD technology is a different stack that has been around for a very long time. This blockchain technology is completely different. It follows very different rules. Balances, for example, are not completely anonymous, but they're pseudonymous. It means that you know which address is doing a transaction, but you don't know necessarily who is behind that specific blockchain address, right? And sometimes you have to compute balances, adding up transactions. Sometimes you have to compute balances by subtracting one transaction to another. So the technology is quite different, which means that you have to build a new technology stack to interact with this technology. And since obviously there's no possibility of unwinding transaction, the technology stack has to be very secure, since all the assets are basically digital and held online in blockchain ledgers, and you have to make sure that your cybersecurity is up to speed. And at the end of the day, you have to be able to kind of, we have in the blockchain world, we have the same problems that financial institutions have in the traditional market, but we have to solve them with a different technology. I'll take one example, which is, I think, something that everybody's familiar with, kind of KYC, AML, CTF, right, which is the nightmare for most financial institutions. So we have the same problem as a custodian in the blockchain market. But since the blockchain is pseudonymous, we have to tackle it in a different way. So we don't know who's behind the transaction, which is a disadvantage. But at the same time, all transactions are public. So we know exactly what's going on between every single market participant. In the traditional market, you know who's doing the transaction, but you only know the ones that are connected to you, right? You don't know what transactions HSBC is doing with Citibank if you're JP Morgan, right? But in the blockchain world, we see them, right? Which means that we need to change the way that we approach the AML problem. We need to build new tools to make sure that we can be comfortable with the risk the compliance risk that we're taking, and we're able to explain it to the regulators when we apply for a license.
Thank you. So accuracy and trust is like super important. So we hear a lot about cryptocurrencies, NFTs, security tokens, and central bank digital currencies. Now, what type of digital assets do you hold for clients? And can you provide custody for them all?
I'll start from the second part of the question, right? So the good thing about the blockchain technology is that it doesn't really matter what the ledger entry represents. The technology would be more or less the same, right? So whether it's a Bitcoin or a security or a stable coin that represents US dollars or a shield in a game, in an online game, or an ape, right? It would be very similar from a technology perspective. It's just an entry on the blockchain ledger. So to answer your question, yes, in theory, we can support all types of assets, from cryptocurrencies to tokens to NFTs, etc. I would say the complication here is not really related to what is the underlying asset. It's about what technology is used, because some assets might be issued on a certain blockchain protocol and other assets might be issued on a different blockchain protocol. So you have to be able to have connectivity to as many blockchain protocols as possible to offer a satisfactory service to your clients. In terms of assets, what do we offer custody for? Obviously, the main assets are the cryptocurrencies still. They are by far the largest part of this asset class. So Bitcoin, Ethereum, I would say the top 10 coins, more or less. And then you have the stable coins that are becoming more and more important in this market. Then on top of that, you have, I'll say, all the tokens that are issued on top of these protocols. The ones that I think everybody's now familiar with the name ERC20 tokens, right? So they are kind of standard tokens that businesses use to basically run their own application on top of blockchain protocols. So when we talk about DeFi, every DeFi protocol usually has a token, right? Which is usually in a ERC20 or equivalent standard. And that also goes in custody with us if our client is the blockchain application. In terms of NFTs and related assets, I would say metaverse assets more than NFTs. Yes, we've seen, I would say, an exponential growth of this asset class within an asset class. And we're seeing lots of institutional investors, corporations starting to take their first steps into this market. So I think we were the first custodian, if not globally, at least in Asia, to support NFTs. And since then, we've built our offering around the services that we can provide for NFTs and the metaverse. Obviously, our largest investor is Animoca Brands, that is the leader in the space. And together with them, we're also building a separate company, a JV between the two of us to basically focus entirely in the space. In terms of the last two, security tokens and CBDCs, security tokens, we haven't seen much so far. We do have something, a little bit of security tokens in custody, but we haven't seen any growth in the last years. And CBDCs, it's something that confidentially I cannot disclose the details, but we are kind of participating in different projects, but we haven't seen anything live yet.
Thank you. On top of custody, what other services do you offer to your clients, and which do you see as a key growth driver going forward, and why?
All right, so blockchain financial institutions, they're not very different from, I would say, wholesale banks in the traditional market, but there are some differences. Just to oversimplify, we have two categories of services. We have I would say, traditional financial services and the blockchain-specific services, which kind of do not exist in the traditional markets. So on the traditional services space, obviously, we offer custody as our core offering. Then we allow our clients we offer trading to them. So basically, we allow them to trade their assets, spot and derivatives. We offer market-making services to companies that are issuing new tokens. We do offer financing solutions. So usually, the market is mainly a money market, collateralized type of market. So we do provide kind of collateralized lendings and simple structures. And we're starting to see some structured products in the market that we are looking into and hopefully providing in 2023. At the other end of the spectrum, in terms of blockchain-specific services, that's where it becomes a little bit more interesting. So, and that's what we're specialized in. So obviously, we provide the basic services of staking. So you have an asset, and you can stake it to obtain the network return. We offer governance services, which means you have an asset, and this asset gives you some kind of voting rights in that specific protocol or network or application. So we allow our clients through our platform to vote and maybe being rewarded for voting. We do provide cross-chain swap services. So since we talked about in the blockchain network, you have several protocols that kind of compete, and assets can be issued on different protocols. So a little bit kind of you have a stock in Hong Kong, and then you have an ADR in the US, right? So it's issued on a different stack, but it's the same asset. So in the blockchain market, you have USDC that is issued on Ethereum, but you also have USDC that is issued on Algorand, right? So if our clients have to use USDC on the Ethereum network, but they have USDC on Algorand, then we would provide this bridge to transform the USDC from USDC on one network to USDC on another network. And I think these are, if we think about the real growth for our business, we're really focusing on these blockchain specialized services where we see less competition, especially looking ahead, we'll have more traditional financial institutions entering the space. And it makes sense that we have a competitive edge in these blockchain specialized services.
Thank you. So where do you see the future of digital assets going?
Oh, well, I think this is really just the beginning of a big revolution, right? So we're living in a digital world. We are at the beginning of seeing the importance of having a kind of a decentralized metaverse, what some companies are working on. And I think digital assets will be the main kind of the main assets that will dominate the space. I think that we will be adopting more and more digital assets, and this infrastructure in turn will, at a certain point in time, will be able to replace a big chunk of the traditional financial markets infrastructure as well. What I would like to see in the future, if you ask me, in 10 years, right? So I would like to go to a convenience store, have my digital asset wallet, right? With my, I don't know, NFTs, right? And I want to buy a KitKat and I want to pay with my NFTs. But the convenience store wants to receive dollars, right? Or maybe USDC. So I will use my wallet. The wallet will go directly on the decentralized exchange and exchange directly the NFT into USDC and eventually pay USDC to the merchant. And I will not have to know what the merchant has received, and the merchant will not have to know what I paid the KitKat with. And all of this can work nowadays. I mean, we already have the technology without any financial intermediaries in the middle. So without having to go through all the rails that Visa or MasterCard have built. So I think it's quite revolutionary. And I think that's what's going to power the whole kind of metaverse space.
No, that certainly sounds very powerful if that's going to happen. So what does the future hold for HexTrust? What are your plans for the upcoming years?
All right. Maybe where we are at a stage where we already have a good, I would say, global platform. We have 3 main hubs in Singapore, Dubai, Bahamas, and we have some specialized offices from a commercial perspective and technology perspective in Milan, Hong Kong, and Ho Chi Minh. So we are at a, I would say, good point to offer a global service to our clients. Now, what's going to happen ahead of us? I think this asset class will become mainstream, and more institutional investors will come into the space. More big corporations will come into the space. Real estate developers will start building on the metaverse. There will be an explosion of adoption of GameFi, and there will be more and more need for institutional infrastructure, right? So companies such as HexTrust will be more and more required, hopefully, in this market. Our main objectives in the next few months are basically 3 things, right? So we want to continue our effort to obtain licenses in the relevant jurisdictions. This might seem like a simple exercise, but it's actually very complicated, and it comes with a lot of educational process and discussions with the different regulators around the world. Right? Secondly, we want to build a complete. So one thing that we didn't mention about the blockchain is that it's never off. Right? In the traditional market, the stock exchange opens at 9 a.m. and closes at 5 p.m. Maybe there's a lunch break. It's closed over the weekend and on the public holidays. Well, this thing doesn't exist in the blockchain space. It's a 24/7, 365 type of market. So you can never be down, and you have to be able to operate around the clock. This might seem like an exercise. Okay, you're going to hire a little bit more people and make it work. Well, it's not like that. You have to be up and running, securely, smoothly on a 24/7 basis, and it's very complex. And that's what we are working on to complete our real operational infrastructure. Yeah. Thirdly, we want to really be the leader in terms of the technology in the custody space. We've gone through first the bear market, then we've gone through a consolidation market during the bull market, right? So many big players acquired smaller ones, and now we're in a bear market again. And I think it would accelerate the consolidation, right? So we'll be left with I would say, limited number of players, and we want to make sure that we sit at the table of the ones with the best technology offering in this market.
Thank you. We have a few questions that came in. So one of them was from the adoption progress, because we mentioned like a few clients that you guys service, like the traditional clients like the banks, financial institutions, or corporations like family offices and high net worth individuals, and also digital asset organizations. So have you seen the adoption growth, I mean, being faster or slower than what you expected? And, you know, which adoption do you see like fastest growing among the clients that you serve now, like in terms of categories maybe? Okay. And are they growing, faster or slower than what you expected?
I think so HexTrust focuses on the institutional market, but as I was mentioning, we do have a joint venture with Animoca Brands called Griffin that focuses on the more retail market. So the retail market has seen an adoption that has been extremely fast, and I was not even expecting this level of quick adoption. Everybody speaks about metaverse. Fewer people speak about GameFi. Right? I think GameFi is going to be really the killer application going forward. And I don't know how many millions of users we have today in the kind of blockchain-based games, but I think in the traditional gaming industry, we have over 2 billion gamers. Right? And I do believe that in the next few years, all these gamers will transition to blockchain-based games where you can actually own your assets, you can transfer to other games, you can rent them, you can borrow them, you can put them for sale in a separate marketplace. And I think this has seen an adoption which is really incredible. On the other side, in the institutional business, I think the banking world has been even slower. I mean, I believed it would be slow, but I couldn't predict that it would be so slow that in the second half of 2022, we still don't have any traditional banks, or very few that have, I would say, competitive offerings in the digital asset space. When you have so many wallets and so many people that trade on the main exchanges, right, the blockchain exchanges. So banks have been extremely slow in the space, and I'm not sure what's going to happen in the years to come. Whether it's going to be too late for them to enter the space, or whether there is still an opportunity to hurry up and kind of carve out their market share. On the other side, I think I was very surprised by the fact that in the last 12 months, there has been the appearance of corporations entering the space. Maybe for some reason, cryptocurrencies were not very palatable to them. Maybe it was not something easy to explain within the corporate structure, but for some reasons, the metaverse and NFTs and buying land on Sandbox or is something that works quite well. So we've seen an enormous number of traditional corporations entering the space, from transportation companies to real estate developers, obviously fashion brands, etc. And I think this trend is only accelerating, and we will see more and more companies coming to the market in the next few months.
Yeah, which is certainly good to hear. To follow up on what you just discussed, Alexio, from your discussion with traditional clients like banks, for example, you mentioned that the adoption has been slower than what you were expecting. But from your current discussions with them, does it look like that the adoption should pick up very soon, or you feel like still not really as they're not as active as what you expect them to be?
I think that there has been an acceleration back in 2021, I would say, during the bull market as usual, right? So where obviously they were receiving lots of inquiries especially from the private banking arms of the banks, and then you know how it works. It's usually you have clients demanding a certain service, and then the organization moves faster because there's actually client demand, and you don't have to justify a new business case, right? So I think in 2021, they must have experienced a huge internal demand, captive demand, and hence they accelerated their pace. But this year, after the big crash and all the, I would say, regulatory issues and the fact that the regulators are even more active in the market and they've been examining what cryptocurrencies companies are doing, I think there has been another deceleration of these processes within banks. There are exceptions. There are a few banks that I would say they were able to set up digital asset teams, maybe starting from traditional investment banking services, and they are being quite successful in their journey. And there are other banks which I believe they have taken a very smart path, which is the one of partnering up with blockchain companies. I mean, we know that it's not easy to get a new business plan through all the intricacies and hierarchies of very well established financial institutions, right? So sometimes it's much easier to say, okay, this is not going to work within the organization because by the time we approve it, the market will have completely changed. So we'll be out of the market again. So how about we create a separate entity that is managed separately and is in partnership with a experienced blockchain company. The bank provides that kind of backing, trust, kind of balance sheet, etc., and the blockchain company provides the expertise. I would say the agility that is necessary to operate in this market. And these models have proven a little bit more successful than what we've seen coming directly from financial institutions.
Which probably makes sense too. I mean, right? Yeah. Okay. So tying into that, the second question that came in was, can you talk a little bit more about the JV between yourself and Animoca Brands?
Yeah, sure. So this JV dates back 1 year ago. So I'm trying to put it in a way that is not going into the technology details. But one thing that the blockchain allows is to basically is to do self-custody, right? So while if you have your US dollars, you can do self-custody of the banknotes. But if you have the digital version of US dollars, you have to put them in a bank, right? The blockchain world is different. You can actually keep them in your own self-custody wallet, right? So without touching any of the kind of licensed, regulated infrastructure. So which means that on the retail space, a lot of the transactions is basically done on a self-custody basis using online wallets such as Trust Wallet or MetaMask, the browser wallet MetaMask. Now this has been extremely successful because users, for example, they don't have to onboard with a financial institution. They don't have to pass a KYC scrutiny, due diligence, et cetera, and they can access all the decentralized financial services without having to be professional investors or having some kind of suitability assessment. Yeah, so it really had a very positive impact on the initial adoption. However, as the market develops and digital assets become part of the overall metaverse economy, we cannot expect this to last for a very long time, right? And I would say regulators around the world, they would want to be able to understand whether digital assets are used for money laundering purposes or terrorism financing, right? So there is a need to basically bring regulation and licensing to also this kind of retail part of the blockchain use cases. In addition to that, this kind of safe self-custody comes at a kind of trade-off, right? So you don't have to go through the KYC, you don't have to go through an onboarding with a financial institution, but you are responsible for your assets, which means that if the wallet is accessible via a certain password or combination of passwords or passphrases. If you lose those passphrases, right, there's nobody that would be able to regenerate the wallet and give the assets back to you. So, and then you have people that have accumulated a decent amount of assets that start writing down the passphrases on one piece of paper, putting it in the safe at a bank, putting another piece of paper at another safe, and it becomes, and then you don't have only one wallet, but you have one wallet for each blockchain for different applications, and then it starts becoming a nightmare, and in turn hinders the next level, the next step of adoption, right? So what we thought is, okay, here we need to bring to the market a more compliant wallet that simplifies the user experience and leverages on, I would say, institutional grade infrastructure to provide a very easy to use service. So that when you are going to play a blockchain game, it's going to be as easy as playing a PlayStation game. You don't have to remember passphrases, you don't have to create a wallet, don't have to do anything, right? It's just kind of logging into the game and you will have your wallet embedded in the game with a KYC, et cetera, et cetera. So that was the idea behind the company. And we started working on it together with Animoca Brands. The company has been officially launched a couple of weeks ago at the MotoGP in Italy. That's been renamed MotoGP San Marino Griffin, so after the company's name. And the real objective of this company is to not just creating a wallet, because there's a lot of wallets out there in the market, but to allow to create a passport, an identity, a metaverse passport that everybody can use to enter the metaverse and to interact with the different applications that are out there in the metaverse with a very simplified UX, the same level of security as an institutional custodian, and at the same time within a certain compliant framework.
Thank you. That's very helpful. I think we have probably time for maybe one or two more questions, most. So another question that came in was, HexTrust is fully licensed in Hong Kong, Singapore, and Dubai. Digital asset regulation must be a key component of your success. Can you tell us about the difference in licensing in these jurisdictions?
Okay, this could take the whole day. I would say there are mainly two types of regulations, really in a very simplified way, right? So some jurisdictions have developed a complete digital asset framework, right? Which allows you to do, which is very similar to the framework that financial intermediaries have to comply with, right? And that framework allows you to do custody, to do trading, to do financing, depending on what kind of activities you apply for under the license. An example of this is, for example, in Singapore, or the new framework in Dubai, or the framework in the Bahamas. Yeah? On the other side, you have some jurisdictions where there is no real digital asset framework, but there's some kind of law that covers the AML and CTF aspects of the digital asset activities. And I would say this is, for example, what is the current status in Europe. In most countries in Europe, for example, in Italy, where we have a license, or in France, where we are in the process of applying for a license. And it's partially the case in Hong Kong, right? Where if you get a TCSP license, you basically have to comply with the AMLO, the ordinance, and you can provide some certain digital asset services without having a formal license issued by the SFC.
Thank you. That's very helpful. I think with that, we will probably conclude our session today. Thank you so much, Alessio, for spending time. We've learned so much more about HexTrust and certainly about the whole space, the crypto space, the NFT space, and where the direction might be going. So really appreciate it. And for audience, if you have any further questions, please reach out to yourselves, and we can, and then we can convey the message to Alexio and try to answer them for you. Thank you so much again, Alexio. Thank you.
Thanks for having me, Sandy.
Thank you. Thank you.